Okay, good morning traders and welcome to this live intraday strategy webinar. Today is Wednesday, June 7th. Michael Boutros here with you this morning. Good to be here, guys. We have a lot of event risk on tap. And certainly there is, you know what? I do see that. I'm not sure why that says David. Let me change that real quick, Graham. Sorry about that. All right. So, sorry about that little delay there. So we have a lot of event risk on tap, like I was saying. We have the UK elections, which is on tap tomorrow. The ECB obviously is going to take center stage for the Euro crosses. We've been covering that. As a disclaimer, I did just close out a short on that. We'll talk about that level we came off yesterday at 112.85. We'll also be looking to the Comey testimony, okay? So it's going to be interesting to see how that pans out and how it moves the markets. Look, as far as trying to come up with a game plan or a trade setup based on the Comey testimony, it's just not something I'm looking to do. It can be certainly a catalyst, okay? The dollar is at support. We were at a big level last night ahead of the Asia Open. We talked about that, 96.47 ad nauseum. Okay, we didn't quite get the clip of that level. You're seeing a little bit of a reversal here. Again, we've been talking about the fact that we've been marking some divergence into this low. Now checking the weekly open as resistance. I mean, it doesn't get much cleaner than that, guys. Here's what it looked like last night for the dollar index. On the near-term chart, you saw this little consolidation pattern heading right into 96.47, that key region we were talking about. And then we turned and came right up into the weekly open. The monthly open, which converges on a basic slope off the highs from last week. And here, again, I mean, doesn't get much cleaner than this. So it's been a slow grinder here for the dollar index, but, we're not going to be sticklers, okay? We turned just pips ahead of that 618 key retracement. Again, this is a retracement from the entire advance off the lows that we made for 2016. And it certainly comes in alongside some nice slope here, whether you use the February or January lows. They both highlight that region just below. So look, you have a really clean weekly opening range at this point, just below the monthly open. I would really, if we saw a break above this region, 97.31, 97.67, 87 again, but this is still the key threshold. Okay, this is still our bearish invalidation level. So even if price comes up into this region over the next day or so, that's still a region we would need to clear before we would get any type of more meaningful constructive outlook for the dollar index. Hey, D, good morning. Graham, Karthik, same to you. Good to see you guys here in the room. Any questions on the dollar index? So it's pretty clean. No surprise, in fact, that you saw the euro pull back in overnight trade as well. So we'll take a look at that. But as far as the index is concerned, very clean weekly opening range. Like I said, big event risk tomorrow with both the ECB. This is 60%, the euro, and the Comey testimony. And again, the only thing with the Comey testimony you want to pay attention with is if they do come out and the commentary would suggest that there is something more to this, that would certainly stall any types of reforms or certainly any types of new policies, friendly, growth-oriented policies that the markets were expecting, and that could hit broader risk assets. So that's the kind of translation that you want to kind of keep in mind. Leave yourself out of all the chatter and all the hysteria. Just really the focus is on whether or not we clear this near-term range. If we clear to the upside, these are your two levels you'd be looking for: possible exhaustion, key resistance. A break lower from here, sayonara. Remember, downside break of a descending channel, we always talk about this, is typically going to be a very sharp part of the move. So again, if we were to break down below 97.30, I would call it, look for 95.89, just a soft target. That's the election low. And then again, you have a nice pivot in price down here all the way down to 95.18. Just above that, you have those former swing lows from February of last year. So the levels are pretty clear. Heading into big day of event risk tomorrow and the close of the week. We have some very nice weekly opening ranges, guys. Use these to your benefit. Okay, let's see how this pans out with tomorrow's stacked up calendar. That's number one. Any questions on dollar index? All right, let's jump into number two is going to be Kiwi from last night. Here's what the Kiwi dollar looks like. And here's what we looked like last night. So as far as this thing is concerned, 72.04, I reworked the whole level. So, we were going over this for the last couple of days. I presented it on Friday of or Thursday of last week here on the intraday charts, but I kind of did a whole rework of the levels, guys. So bear with me today. We're just going to go over this real quick. The first things first, the daily chart for the Kiwi, this is the new slope I've kind of added on. And while, again, I don't want to get too reliant on it just yet, you can see that the 50 line was perfect resistance here. When we saw a break of the median line, specifically on a closed basis, that's when we saw acceleration, and the upper parallel at this point converges right on that 618. This 618 is off the entire decline off the 2016 highs. Okay, so that comes in at 72.30. Also maps out with some pretty nice pivots in price. Some swing lows on a closed basis, the swing high, nice pivoting price, all converge right here. Okay, momentum coming into resistance at 70. Okay, even have a near-term trigger that you could possibly work with here. Again, off the low in price, just as a sort of visual graphical representation of when this thing could possibly turn on you. So, take it into the intraday charts. Here's what the 240 minute looks like. Okay, and here's what it looked like again on last night's piece. Near-term ascending median line formation. This is similar to the slope that we were looking at last week. I just moved the low. Sometimes you got to be a little bit more creative with your reference points, guys, on these. And you could see that the upper parallel did break, which would technically keep our focus higher. Now, like I said, 72.04 ended up being that swing low that we talked about. 618 retracement, 72.30. Both of these levels, areas of interest for possible exhaustion, possible triggers to the short side. Again, not necessarily calling a peak to the rally, but certainly recognizing levels and indications in momentum of where this could be vulnerable. And heading into the end of the week with all the event risk on tap, with the dollar index at support, with this thing, this has been a superb rally, guys. I mean, looking at this just on a daily basis, last month alone we did 4+% on the upside. So, nothing says this thing can't keep going, but heading into 72.30, certainly I'll be curbing my appetite for any type of long exposure here on Kiwi dollar. By the way, there's that swing low we're talking about just from August of last year. So, long story short, for the Kiwi dollar, not really interested in taking any long exposure from here. A spike into 72.30 or a break below the Asia lows might be sort of an indication for a near-term short position. In any case, you'd be only looking for a move towards 71.30 initially, which is basically just above the weekly open and that 50 line. Bullish invalidation down here at 70.90. As long as we stay above some former swing highs, the median line of that current structure, and the monthly open, I'll continue to favor the upside. It's still a constructive trade. It's just you're coming into structural resistance at this point on building divergence. It's just something you want to be mindful of. Now, if we were to close above that 70 mark in momentum and pop through 72, you're basically looking for a stretch into this trend line, which extends off the high from 2016. That takes you all the way up into 72.85. Near term, though, I'd be looking for exhaustion in this zone. Questions on Kiwi dollar? Okay. The better of the two was Aussie Key last night. And here's what Aussie Key looks like. So this one is also one that we've been following really close. Basically, for Aussie Key, it turned right ahead of that Key support confluence, 2017 low day close, okay? You can see that we dipped briefly below that parallel, extending off the September lows of 2015, or 2016, excuse me. And we posted a really strong reversal off that. Again, the intraday charts, as far as Aussie Kiwi was concerned, you know, really strong rebound, taking you right through back above that 50 line, which was former support, break, pulled back above it, and now we're back above that region. What you want to note on this, guys, and I guess I'm trying to just walk you through the process of how we kind of come up with this bias to actually look for the long side. Look at how price action reacts. One thing that you want to take into account, again, looking at this objectively, is what the momentum signature is doing. And you can see that on the way down, new lower low, lower lows, the oscillator didn't quite make all higher lows, but certainly the reference points on the peaks were divergent. Then when you see a strong thrust like that, and certainly on that thrust, if you take it back to the daily chart, what turned our attention to begin with was the fact that the daily chart posted an outside day reversal at the lows. That's typically going to be a bullish type of play. So long story short, the intraday chart, 104.80, 104.90 rather, was near-term resistance. You had those former swing lows, a 764 retracement, a pop higher. You're basically looking for a rally back into 105.50. And this is the mark of key resistance, and again, our near-term bearish invalidation for the broader decline we've been seeing here. So you saw that the stretch and overnight trade popped through. You came through 104.90. Kind of getting a little bit of pullback here. This is also the monthly open. Keep that in mind. So we're right at the monthly open. I still do think you risk a stretch back into 105.40, 105.50, this key region of resistance. Any long exposure that you have on tap or holding from last night, that's where you want to wrap it up. And this is also where you want to reassess sort of what we'll be doing with the near-term picture here for Aussie Kiwi. If we break higher, I would look for a recovery into the upper parallels. So you have clear-cut targets. But we'd have to, I think you're going to have to really take a close look at what Kiwi does as this thing gets into that 105.50 range. So more critical resistance, about 50 pips higher from where we are right now. You're sitting right at the monthly open for Aussie Key. And again, we'll be waiting for a little bit more of a clearer picture here. Immediate risk, in my opinion, is still for a rally back into that 105.50 region. Questions? Vlad wants to look at Euro Yen and Euro Oz. Euro Yen and Euro Oz. No problem. Gotcha. So that's Aussie Key. No change to any of the levels as far as the scalp targets are concerned. All right. So yesterday I also took a minute to go through the commodities that we've been following. Look, the energy markets have been making, or soft metals, or soft commodities, excuse me, has been making a lot of noise as of late. I wanted to kind of clear your head from all the headlines and keep you focused on price because, guys, as far as crude and nat gas at least is concerned, these levels have been ridiculous. They've just continued to play out really well. So Sarub wants to take a look at gold and silver if we have time. Let me jot that down. Gold, silver for Sarub. I got you. But for crude, I mean, geez, this thing is just super clean. Just to bring your attention again to what we've been looking at. We highlighted earlier in the week, watch 146.88, 146.45. That was the premise of sort of the update that I gave earlier. Watch any type of short exposure beyond this region. Huge support confluence. Okay, you had the median line for the current operative structure off the highs from the year. You had a 618 retracement just from the advance off the May low. And you had 100% extension. So two equal legs down would take you as low as 46.45. So this whole region, okay, 40-cent region, you just want to watch for near-term support. We've been bobbling above the upper end of that region. This is basically 3 attempts, rebounds off that region. And you've set a very, very well-defined weekly opening range with the weekly opening range low at support and the weekly opening range high just below the monthly open. This thing is like a gift, okay? So basically, you know the levels that need to be invalidated. It's either a breach and a move northbound of 48.60, monthly open, 50 line, weekly opening range high, all stacked here, or it's a concerted break below 46.46, in which case, 46.45 here, in which case, you know, keep looking lower. You're looking at 45.50, you're looking at that 50 line in the lows for the year. So as far as the levels are concerned, right on point. They're very, very clear cut, well defined. Even the fib levels have given us very nice plays and reversals in price. And I'm just, you know, I love this setup. I think you get a really nice play off this once we clear this range. Now, which way does it break is kind of the question. Okay, if crude breaches the upside here on dollar weakness, which is kind of, you know, not my favorite play per se from here, but let's just say it does, and dollar continues to break down on the index sub 46.67, then, you know, you'd look for a recovery possibly back up into the 50 handle. But largely speaking, this is your focus range. Okay, as long as this range holds, you respect support, you respect resistance, you know, the downside break is really what the risk is to materialize into a much bigger spill here for crude. That being said, I'm not going to pre-position on this trade. If you are getting involved in the crude setup, this is basically the range you want to respect until we clear it. Okay, until we clear it. On trades like this, guys, where we're awaiting the break of the weekly opening range, one thing you can do, and this is again for you know, you want to be a little bit more experienced before trying stuff like this, but one thing you can do is, as you play the range, you know, you're selling at resistance, you're buying on triggers at support. As you head into the upside, the opening range highs, or if you're holding a short into the opening range lows, you know, leave a small position on whatever, you know, let me take a step back. Whatever a lot sizes you're using, guys, it doesn't matter to me as far as when we're trading, right? I don't care if you're using 10 standard lots or 10 mini lots or 10 micro lots. It doesn't matter. The point is, you can leave a position on, bring your stop to break even, and wait to see as you head into the event risk if you can get the break in the direction that you're playing. That's a lot of the way I've been playing this as we hold positions, especially if we're going into an event risk and I still like the trade. I don't necessarily want to jump out, right? Dollar yen worked out pretty well last week. What else? Even the euro. I mean, I kind of just left that one on. It got stopped out at break even. Inevitably, if my stop was a couple of pips further out, it would have worked out great. But coulda, woulda, shoulda, right? At the end of the day, a break even stop for me is a good way to play it, considering that the upside of that trade is if we do get the breach of resistance, well, now, you know, I have a great entry and I'm kind of going to ride a little bit of a stretch through subsequent targets. So keep that in mind. I hope I didn't digress too much. Crude pullback yesterday right after the webinar, said Sandy. Yup, right after the webinar, pulled right into that support, right? Right here. And you posted right through, came right into the weekly opening range high, failure, and here's the pullback. So your focus range is still right here. And crude certainly is going to be making headlines. And again, if you do see some broad dollar movements on COMI tomorrow, you know, that is likely to offer some volatility on some of these commodities here. All right. So any questions on crude moving along here? Number 4, levels remain unchanged and very clear. Okay. Nat gas, number 5. So another one that actually played off really well. It's basically a very similar trade. Here's what it looked like last night. Again, you know, on the 5th, we were talking about that major key support, 291 into 286, both areas of interest for exhaustion / long triggers. And basically on that dip that we got the subsequent day, It came right into that region. It held as support. Again, here's what the update looked like. As we were stretching into that region, it actually just held as support. 291 held. We rallied right into the monthly open, which is now the 236 retracement of the decline as well. So as we were coming into yesterday's session in Asia, I just wanted to warn you guys that although the weekly opening range broke, we were still at resistance, right? We were still at the monthly open. We're still at the 50 line. And I kind of just wanted to curb your appetite for the long side until we get an hourly close above. Well, we've gotten it now. And you know, it looks like you still want to stay on a corrective path here, targeting 306, a little bit bigger of a region of resistance for natural gas. 306 is defined by not only the 38.2 of the advance. Okay, check this out. This is actually pretty cool, but it's also the 38.2 of the decline and the 100 and 200, excuse me, the 100 in blue and 200-day moving averages converge right there. Such a huge region of resistance, and just above that you have also the median line. So either way you slice it, any long exposure on nat gas, you're looking a little bit higher towards that 306 handle. Near-term support still 299, basically the 236. That nice pivot we made in overnight. And again, I mean, you'd stay constructive basically against the opening range highs for the week. So just some key levels you want to keep in mind here for nat gas as you make that run. You know, crude, while crude has not cleared its weekly opening range, nat gas has. So a lot of these times when you see those divergences in near-term price, one of the two is lying. Maybe one will catch up. Again, I do think that crude does have a little bit more legs, maybe to see a pop higher before it turns. But that would coincide basically with what we're seeing here in nat gas anyway. So look for 306 as a bigger region of resistance. By the way, let me just tell you one other thing. On the daily chart, basic trendline support, break was instant resistance, break saw acceleration, break testing the underbelly as resistance. Okay, and look to the left. It's actually the exact swing high that we made right here too in March, on the March opening range high, which when it broke later that month on the 20th, gave you that late month high. So all the types of analysis that we're looking at, whether you put it together from you know, weekly opening range, or whether you put it together from just the larger median line formations we've been following, does suggest that if we do see some stretches higher here, I do want to be looking for some near-term resistance in nat gas. Big level we came off of. Shouldn't be any surprise we're seeing a bump here. 306, key resistance on nat gas. Any questions on that trade? Okay, moving right along into the juicy stuff here. Heading into the ECB tomorrow, here's what the euro dollar looks like. I got squeezed some juice out of this one last night. Look, we've been talking about it, guys. 112.85, big level. 1618 extension from the advance off the yearly low. You know, at this point, yeah, heading into the start of this week, it was also the monthly opening range high. It was just below the weekly opening range high. Momentum was marking daily divergence on this chart. We were looking at that. Doesn't mean you want to take it all out, you know, throw everything at the wall and just go short, but certainly from a near-term prospect, there were some very nice triggers to put you on the short side. So here's what euro looks like now. Here's what euro looked like earlier in the week on the 5th. Okay, talking about that daily chart, that 112.85 level. We just looked at that. We were talking about the divergence this thing was making into the highs. Again, near-term support, former slope resistance, that comes in lower. We haven't hit that yet, guys. That's like 111.60 is what you see here. But on the intraday charts, certainly the initial target for the short would have been 112.05. I had my limit at 112.10, so I got out a little early, but we actually got even lower than that. I think the low was 112.04. So you have slope support. Okay, again, let me bring that back. We have slope support extending off the lows from that initial May opening range lows. You have the pivot in price, and then just a big figure. Markets will typically look at that as well as that Friday low. So that was the initial target. We're there now. Again, it also constitutes a break, technically, of the weekly opening range, right? Here's your weekly open. You made a low. You check the high. That holds. Again, a break through the lows puts you bearish, looking for a late week low. I wouldn't necessarily take a stance like that as aggressive heading into the fresh start of a new month. And especially with the event risk that we have on tap, guys, you don't really want to stress opening ranges when you're heading into major critical levels like this. So at the end of the day, what I'm saying is this. I do still think that this has the possibility to spill a little bit lower, especially with what the index is doing, but this is the support you need to break. So broader bullish invalidation, remember, is still 1160. That's the former slope resistance, now support, decent pivot in price, and that would take you, I think, a little bit lower. Okay, if we break below this, I think you risk a little bit bigger of a spill here back into that parallel, which caught some highs, and that's basically like the 111 handle. So wouldn't necessarily want to be holding any long exposure on a drop like that. Sandy says, good that I'm out of my short. I'm out with 30 pips this short here. Oh, on Euro, Sandy. It was a nice play last night. Absolutely. Well done. Well done. Again, I still do think, you're at risk here for the Euro, but heading into the US Open, heading into ECB, guys, I am not going to take a strong stance on this. I would tell you this, though, especially with everyone so lined up here. Go back to the daily chart. If we were to get, and I don't like playing this game, guys, but I'm just being completely frank with you, heading into tomorrow's price action, if we were to get ECB being a little bit more hawkish, less dovish, that followed by some sort of bump or drop in the dollar, rather, on Comey, I can envision a scenario where price spikes into this critical region. Okay, this is basically the highs that we made in August of last year, a 786 retracement of the entire decline and slope resistance. Mind you, this is off the, what is this? This is the December spike here. So I don't necessarily want to play this level or this slope as such a huge region, but it's the same slope we've been following, and it converges both on those highs and a Fibonacci consideration. So that gives you 1340 to 1366. You can envision a scenario where this, extreme volatility, all this pent up, everyone's waiting for this testimony, and the ECB kind of drives this higher and then pulls back. If you were to get something like that, I would actually be interested in a little bit more of an aggressive stance to the downside based on what we're seeing in the broader momentum signature and broader price with what the dollar index is doing. You can envision a scenario like that. But with that being said, at the end of the day, here's your monthly open. Your monthly opening range is being tested right now. Okay, it's just a basic opening range. We'll look for that break heading deeper into the week. Oh, okay. I got you, Sandy. She says I'm flat now anyway. Yeah, I'm flat now as well. I can't say I'll be that way all day. If there's opportunity, I'm going to be the first one to jump on it. But I do tend to take a much more nimble stance with this kind of event risk. I hate this kind of event risk because it's not NFPs. It's not you go in, number stronger or better than expected, look for the market reaction, right? It's the devil's in the details. He might say something that leans the market this way. 10 minutes later, he might say something that leans the market this way. For a near-term trader like me, that's how we get chopped up. So be careful heading into tomorrow, guys. We'll have another session in the morning. Again, we'll go over everything as the ECB is releasing its commentary, but certainly the Comey testimony will come right after the webinar, and that's where you want to be a little more cautious on the dollar crosses. Okay. Again, break below 1205 looks for 1160, and that's a little bit more of a critical region near term, in my opinion, here on the euro. Questions? Euro dollar going once, going twice. You know what? I'm going to take a segue into Vlad's question here on euro yen and euro Oz while we're here, and then we'll come right back to Aussie dollar, okay? So Vlad, here's what euro yen looks like. I think you guys were talking about this with me yesterday in the webinar, and I think I put this together with you. Bearish invalidation at 124.60, near-term resistance 123. We didn't quite make it that high yesterday. The rally took us as high as 123.52, okay, just ahead of that before turning lower. This completes a 100% extension, 122.67. What else can I say on euro yen? Here's my problem with euro yen on this, Vlad. I'm going to take another segue here. Just point you out to dollar yen. We'll come back to dollar yen in just a moment, but I do have dollar yen sort of checking near-term support. I know Jamie's target is just lower on that move, but basically, you know, you're checking slope support at this point. And I'd be cautious about getting any aggressive fresh exposure on the short side of the yen, on the short side of the yen crosses. Do keep in mind that an IDO search 1 month out forecast has the first 5. I don't know if you saw Jamie's tweet yesterday. The first 5 or the top 5 worst performers are all yen crosses. Now, the caveat is dollar yen is not one of those. But certainly it is cause for concern that heading into the start of the month, you know, tendencies are suggesting that, you know, in fact, yen strength is sort of the way you want to play it. So with that being said, going back to euro yen real quick, look, again, a gunshot approach to my, you know, a gun to my temple, I would say, you know, you have to look a little lower. That's based on the fact that this median line formation, which is, even if you just drop the whole median line formation, which has been very clean, you got some messy dilly-dallyiness here, but certainly the median line itself and the upper parallel has been just clear-cut basic resistance. If this is a false break type of scenario, and you do settle and close a day below that spike low, that objectively, you know, which suggests that you're on more corrective path off the highs here. You know what I mean, Vlad? So let me just play with this just a moment here. Again, on a conservative approach, if we just measure the range, okay, if we were just to measure the range break here on a conservative approach, not even using the wick low, right? Just using a little bit more of a conservative trade, the 200 extension, or basically equal legs down. So if this range breaks, your basic technical analysis would say that the width of the range should be and a target extended off the break. And if you do that, it brings you into 120.50. That's a level that we've been watching in a pretty decent pivot in price as it stands. So objectively, you're at support. It's 2 equal legs off the high from the correction, if this is correction, and a break below this, 122, 121, and 120.50 would be your downside targets. At this point, you know, yesterday we put our bearish invalidation level at the monthly open. At this point, I would bring it down. I would just delete this. I would keep it right here, the median line. Also, looks like it could be a pretty clean 1, 2, 3, 4, 5, just near term right off the highs here, which would suggest you are vulnerable for a correction or a near-term bounce from here before resumption. Also noting that it's those lows there as well. Pretty big pivot. I mean, if we close back below the yearly open, guys, that would be an indication, in my humble opinion, that you still have a little more downside to go here in euro yen. Vlad, does that help on euro yen? Euro yen looking good for near-term bounce with short-term divergence at support. CS opening. Let's see the U.S. open first. He says, "Yeah, I got the downside point. Thanks. Cheers." That first comment was from Graham saying that it could see a bounce from here, right? So I do agree with you because of the 100, because of the momentum divergence we just talked about. Let me get deeper in price. Here's what the 30 looks like. You're seeing that divergence much more apparent, much more visible here on the near-term charts for sure. Yeah, I would agree with you for sure that the near term does look like it's vulnerable for a little bit of a bounce. So 123.17, again, 123.68 is what I would keep near term bearish invalidation. Break lower, 122 is on tap. You know, give me one sec. Bear with me one sec. Maybe this is not even the right. Let me just see what this slope looks like. Not bad. And look where look where that upper parallel comes in. That's conviction in your analysis, guys. Okay, so even if, you know, well, let me not say even. If we were to get the bounce that we're looking for here on the divergence, on the, you know, the rebound off of 100%, you know, significant Fibonacci level, yeah, 123.68, right on tap. Right on tap. It'd be a beautiful play. All right. Graham says, I assume you're saying I like that one. I don't know what a lime is, but cheers, Graham. Vlad, hope that helps. Let's jump back to the Euro Aussie, and then what we'll do is we'll look at Aussie dollar. So that was number 7. Euro Aus will make number 8. Here's what Euro Aus looks like. Euro Aus, there it is. So this one we've been following as well. 240. And I don't think, actually, I'm not really sure when we did the last update here. It might have been on the 31st. Here's our last update on Euro Aus. And certainly, it's a level that we've been talking about. We surged through it. We turned right ahead of 52.50. Okay, and here's the break back below. That's why I've kind of been on the sidelines here for Euro Aus for some time. That was a big break for me, and then a failure and a reversal below. It was really on the 5th, basically on Monday here, that things really changed and reasserted back into a short side bias. Major key support that we were talking about was 49.14, and that was the bullish invalidation level. So things certainly have changed. I do think you've seen a change in behavior in the momentum signature as well as you continue to mark those divergences into the highs. We were talking about that into the start of the month. There's the trigger break to the downside. We've already gotten a daily close below it. Today's close will be paramount. You have the 2015 low day close, the 2016 open, and as long as we close below that, you're basically looking for a move back towards the median line. It's like 47, 55, 47.60. This region right here. Now, what I wanted to do is just update this chart for you while we're here. Now that we've made, and this is again a nice progression of how we walk through a setup. You know, this is kind of a clear indication, like I said, a change of behavior, momentum breaking below 40 for the first time since way back here. That was the last major pullback that we had off of support. And you see the break to the upside. Remember, in strong uptrends, typically, you want to see momentum hold 40 support. Look at the RSI signature. In strong downtrends, typically you want to see RSI hold 60 resistance. Okay, and here's 60 resistance. Look at this span. This entire time the market was declining. RSI held below 60 the entire time. So, you know, these changes in behavior you want to pay attention to. Okay, this is the first 40 break that we've seen since the bounce off support. This is the first oversold condition that we've gotten since the lows. So if we come into support, wouldn't be surprised to see a near-term recovery. But guess what? On that recovery, I want to see momentum start to hold 60 as resistance. And if price is at resistance, that's where you start to look for re-entry again for continuation. So that's sort of my opinion here on Euro Aus. I do think Aussie has a little more upside to go. So if it does, that's the downside spout we might need here for Euro Aus. And again, Euro dollar is dealing with its own precarious position heading into ECB. Definitely a pair I'll be watching heading into tomorrow. Okay, but the levels remain pretty darn clean here. I would just mark that high that we made in December as a level at 47.19. Let me copy that over here too for you. And also, once we get another high in place, guys, we'll want to see if we can't get some structure to this decline. This is real tight, but let me just see what it looks like. Forcing it. Okay, let's see if we can wait here for, sort of a dip, a rally, then maybe we can get some sort of slope to work with. But this is the onset, at least the initial, of a near-term pullback, I think, for Euro Aus. Vlad, questions on Euro Aus? That's also for you, my friend. That's number 8. Okay, heading towards the end of the session here, let's just pick up the pace a little bit. Aussie is going to be number 9. Here's what Aussie dollar looks like from earlier. Heading into the webinar yesterday, we were talking about the median line offering resistance near term of the near term, sort of the newly added or newly identified structure that we added. Guess what? We broke above it, tested it as support. It held, and we moved right into the final target, which was 75.40 into 75.38. Again, I don't have any long exposure on at this point, guys. That was my final target. It obviously went much higher into the 75.70. What was the high? 75.67? 75.66. So I'm not interested in taking any fresh new long exposure from here, but I also don't want to get aggressive on a pullback play. So I'm kind of neutral for Aussie. I do think it has the risk to pull back into like 75.17, but I feel like that would just be too clean of a move at this point. So yeah, I'm going to sit this one out here. But if we were to get a pull here and a decent long trigger, it would be the first area of support I'd be looking for. Ultimately on the Aussie dollar, it's like I said, we're playing catch up with Kiwi, but what you want to be mindful of is that this break, or where we're at right now, obviously you have the 100-day moving average. You also have the highs from May. So this is the May high being tested right now. Former basic trendline support, now resistance. You're pushing through the 50% retracement. So I kind of want to take a little backseat here. Ultimately, the bigger region, like I said, was 76. We talked about that yesterday. Big pivot in price. You have the 618 key retracement and the decline off the yearly highs. So it's a nice big sort of pivot region that's 75.90 to 76.10. But on the immediate approach here, again, with such big U.S. event risk and just broader market risk up ahead, be mindful of that near-term slope. Again, 76.08. Let's call it 76.10. This is the big region. Next topside, major key resistance region here on a push through the upper parallel. And obviously, those swing highs from April. Here's your May. Where's the May high? Here's the May high. Okay, so we're basically testing that right now. So let me do this. Here's your May high. We can dump this 50 at this point. We'll highlight this region. At this point, this slope that we used to extend off the high here, you did get a pause, but we broke through. So, I'm compelled to kind of get rid of it because this is only a 2-point touch. So remember, 2 points is speculative, 3 points is confirmed. But at this point, we've kind of sailed through it and we haven't gotten too much play off it. So I'm going to get that off at this point. 100% extension, Aussie dollar, from the 9th of May. Pooja, 75.60. Is it? I think you caught something, Pooja, there. I think you're onto something. Right on. Right on. I don't know how I missed that. Thanks for pointing that out. Well done. Well done. And Sandy saying Aussie at 200-day SMA on the daily. Yeah, well, we're at the 100 at this point. We came through the 200 already. I have the 200-day SMA somewhere around 75.30. The 100-day is right here. I think that's the 100, right? Yeah, that's my 100. Is right there. So yeah, you've got a lot stacked up here. Not interested in any long side. Not interested in the long side at this point, but again, near-term support. If we were to get that pullback into 75, I think that's where you want to definitely start looking for initial support. Keeping in mind the 75 handle has been an area of struggle here for the Aussie. So should be likewise on the way back too. Rafa says the student is surpassing the master. Well, I'm happy. Pooja's been with us for a while, so always impressed to see that. Good stuff. All right, sterling dollar, number 10. Obviously, UK elections are on tap. Got to watch this one as well. Be careful with the crosses. There's a lot of volatility on them. But as far as the sterling dollar is concerned, the levels remain completely unchanged. I really didn't want to spend too much time on this. I know that the election is coming up, but I don't necessarily think it's going to be all that big of a huge market mover unless we get a massive upset. But looking at the British pound, okay, here's what the update looked like again on the 5th. There's no change to any of the levels. The 618 retracement at 29.41 has continued to offer near-term support. And that is at 129.41. That's a 618 retracement of decline. Plain and simple. Bearish invalidation 29.80. That hasn't changed as long as we stay below this region. The pair is at risk. A break below 28.50 is what I've been talking about as sort of the marker of which we may see a little bit more of a defined concerted decline here in sterling. Ultimately, I want to get long. The whole point of what we've been looking at for the last week and a half is this rebound off the lower parallel it? Is this extent of the correction in the pound? Or do we have one more low to make before this thing rockets on continuation? I don't think anyone's arguing this is an uptrend, right? We all are, I think, in consensus on that. We even broke the yearly opening range. You know what I mean? So on whole, a basic opening range play. Here's your yearly open. You set a low. You set a high in the first quarter. You check the low. It obviously failed miserably. You check the high. Now we're in consolidation. We clear the opening range highs. Come back and check the opening range highs as support is sort of your basic play before continuation. And all of these line up. That concept lines up with what we're seeing in slope as well. Again, markets don't work in a vacuum. What I hope, what I would like to see happen doesn't matter, right? The market's going to do what it wants. So what we have to do is just prepare and be ready as far as recognizing what are the key levels. So 128.50, that's the opening range low for the week. That would necessitate a break of the monthly open and the near-term median line. So as long as we stay above, or if we break below this, that's when we would look for the play down into 27. If we break above 29.80, look for resumption, just straight up resumption of the uptrend. You're looking for 131.20 at that point as your first target, or your first major target from a Fibonacci standpoint. So watch the UK elections, okay? Your initial first range of interest is 28.50 into 29.80. This is what we want to focus on heading into the UK elections, heading into the Comey testimony. Okay, ideal favorite scenario, one last spill, and then look to buy. Again, if we clear 29.80, look to play the pullbacks into 131.20. That is British pound. Moving right along, dollar CAD. I am running late on time here, guys. So dollar CAD number 11 looks like this. Not really much to update here, except that you're at support, 134.27. That's the lows that we made last week. Basic slope support off the lows. Big region. Okay, 2017 open also comes in right at where we are. You know, we've been talking about this region forever, so it's at risk. Look for that break. Sub 134.27. Near-term resistance and bearish invalidation level still at the 35 handle. Again, that's the monthly open, 134.99, I think is the monthly open. Now, with what we see happening in crude, right, might be the play. If you were to see crude really come off a little bit more assertion off that support region that we highlighted yesterday, that might be the strength that CAD needs to really blow through this support region. Such a scenario, you're looking for 33.80. You're looking for that 100-day moving average as your initial target. That's 33.70 to 33.80 on the downside. Questions on dollar CAD? Pooja says the master is always supreme. Cheers, Pooja. Going once, going twice. That is dollar CAD. Number 12 is dollar yen. Here's what the yenski looks like. And certainly another one that has been a slow drifter. So I told you guys I got out of this early yesterday. I haven't touched it since. There was actually an opportunity to get back inside again on this hold of 109.57 as resistance. Again, we dropped into 109. So even on the near-term prospects, you know, there was opportunity to get back in here. I just got kind of timid because I didn't want to press, you know, overly press this trade. But again, I just want to know, you know, divergence into the lows. I know that we're just off target. Our target was 109 and change. Karthik says no AV. Guys, do we have any problems with the AV? All fine. Okay, thanks, Raf. So I just wanted to note that although, you know, our technical swing limit was just lower, you know, we want to be mindful of this. So if we do pop through 109.57, you know, you're likely to see a little bit more of a recovery. So do keep that in mind on dollar yen. Whoops. So levels unchanged from the update on the 4th here. Okay. All the levels are unchanged. Here's the piece. You know, 110 is taken out, 109.57. Again, we booked just ahead of that. There's the lower parallel, and that's kind of what's holding a support right now. So immediately you're okay as long as you're below 109.57. Okay, if you blow through 109.57, I would expect, you know, a little bit more of a recovery. If that were to happen, by the way, guys, just tack on a quick retracement just off the high from Friday is how I would play this, or from last week. To see where you might look for, well, we can do it together right now, I guess, real quick. Just want to see where the 50, 38, well, 38 comes in line with the level we're looking at anyway, so it's clean. It's clean. Okay, dollar yen going once. We got that out of the way. Vlad, we got yours. Silver and gold real quick before we wrap up the session. Here's what gold looks like on the daily chart. We came into a nice region right at this confluence of the 100% extension from the advance off the lows, real near term, and the highs that we made at the April rally here. That takes you what was that, 1296, 1295 region. It's kind of exactly where we capped out. I'm looking for near-term support right at 1283 at this point. Daily chart, there's really nothing here until 13. I don't even want to get into this at this point. I don't want to get too excited about it. You know what I mean? Because I don't want to end up chasing this thing. But if you're trying to get on a long position, a pullback in 1283 would sort of be the initial area of support I'd look at. It's too early to use this retracement with conviction, but I'm just doing this as an example to see where a basic 38.2 and 236 comes in. I'm going to copy this to here. Either way you slice it, it continues to suggest this spot here, basically. That's key near-term support. That's 1274 and 1276. Basic slope support off the lows. You have that swing high that you made back on the 31st, which is also the May high, something you want to be mindful of. Basic trendline support, you wouldn't really typically stress this except for a couple of things. It's a 3-point trendline resistance, so it's confirmed. And the break saw massive acceleration, which is exactly what you want to see. That gives us a range of 1274 into 1276 for near-term support. Resistance breach above 1296. Look for that slope, but it's really the May high. Daily chart highlights that as well. And that's 1303 on the upside. Okay. Sarub, these are the near-term targets I'd be looking for on the gold trade heading into what is going to be a jam-packed couple of days. Really, it's tomorrow. That's the major event risk. Okay, last but not least, Euro CAD, I'm sorry, silver real quick. Also a very similar trade, turned just ahead of resistance. That's checking the monthly open right now. Sarub, nothing new on silver. I would stay constructive above 1740, 1733 here longer term. On the immediate approach, I do think you risk a little bit more of a pullback here into the median line. So it's basically a very similar trade. Although I don't think we're working with such a strong extension resistance here as we are in gold. But we'll see. At this point, you can drop this, actually. Okay, EuroCAD, I just wanted to touch base on real quick. That is 13, 14, and 15. Finally, EuroCAD, last but not least. Here's what that looks like. And again, a trade that we covered earlier in the week. It looked like this. I just wanted to highlight that 52.20 level did hold. Okay, we probed just above it. We saw an opening range break. It looks like basically in Asia tonight for the week. Decent pivot in price here with that move below 51.20 as well. So I'm favoring a move back towards the 2016 open, the lower parallel, like 50.21. Would sort of be a nice area. You'd start to look for initial support, and this region into 49.75. Again, this is a bigger ATR pair, guys, so keep that in mind. But if we were to clear this region, I'd be looking for a straight correction or broader correction in EuroCAD to the downside. Okay, so levels remain unchanged. I'll show you this on the intraday chart. Again, just wanted to highlight this trend line. Again, I'm doing a whole lot of EDU pieces right now. I'm just writing, so it's kind of fresh in my head. But just to show you this, resistance, resistance, resistance. Why did I get bearish on this early in the week? Why did we highlight this? Well, this trend line, you saw a breach of it on Friday. Early this week, you came right back below. Then when you tested it again, it acted as resistance. That screams false break, exhaustion, whatever you want to call it. Add to that, again, the momentum signature finally breaking back below 40. Do think you have a little bit more downside to go before you start to look for some significant support here in EuroCAD near term. All right, guys, we'll wrap it up there. Thanks for everyone who attended. Again, keep in mind, Jamie will be on tap in just a couple of hours at 11. I will be back tomorrow morning to see you through some of the ECB debacle and Comey fireworks, which is likely to fire up the markets tomorrow. So look, stay nimble into the Asia close. Things are likely to get lackluster, guys, as far as volatility is concerned. A lot of times at these major releases, especially such variable ones like this testimony, you'll just see things start to kind of quiet down. It's not where you really want to start pressing things, okay? That's where you want to stress your analysis and have your levels mapped out, so that when things do pick up heading into tomorrow's trade session, we're kind of ready to go. All right, till then, best of luck trading, and I'll see you tomorrow. Cheers.